Hello and welcome to another 30-Minute Thursday. My name is Amit. It is 2 p.m. in the wintry Pacific Northwest. I'm wearing my sweater and we are live on Facebook. I hope everyone's doing great. Hope everyone's staying healthy, staying safe, staying sane in a very insane world. And just wanted to share with you guys whatever information I can as I'm broadcasting from the beautiful studios of New American Funding here in Kirkland. Things in the world are a little bit tumultuous, to say the least. But I pray for everybody's safety. I pray for everyone's sanity. I hope that we remember the things that are most important and that we look out for one another. Let's just jump right in. And this is not going to be a long 30-minute Thursday. I do call it 30-minute Thursday, but sometimes they're much shorter. So today we have information from whoever it is, the Bureau of Labor Statistics or some other government agency that suggests that our gross domestic product is actually growing at a very high rate. This is the gross domestic product for the third quarter. So for the months of July, August, and September. The claim is at least that it is growing by 4.9%. Now, there are three readings on these numbers. This is the first reading. They're going to start to refine and revise and do whatever. And we'll get another reading down the road and then a third reading sometime after that. And so this is not settled yet. And I hope that our economy is improving. I don't know that it is, and I don't feel very economically emboldened at the moment. I don't know too many people who are feeling great in this market right now, in general, not just the real estate market, not just the interest rate market, although those things are percolating along. I would say that there are people in the economy in general that are feeling very constrained. You know, gas prices are very high, food prices are very high, other costs are very high, and we're going to find out just how high things are tomorrow on Friday when the personal consumption expenditures numbers comes out for the month of, where are we? For the month of September. Sorry, it's been a very long couple, 3 weeks. And so we're just trying to get our arms around all these things. But tomorrow, we're going to get the Fed's favorite measure of inflation. This is the personal consumption expenditures number. And that is for last month, the month of September. And we'll see where things are. Of course, there are already predictions and projections, and there's whisper numbers and things that people share about what's going on and what they expect. And when I say people, I mean like people in the know, people like at the various Federal Reserve Board offices or districts or whatnot. There's people in the large brokerage houses like Morgan Stanley and Goldman Sachs and JP Morgan and things of that nature. So they've got their own predictions and projections, of course, and we'll see how close we come to that. There is an expectation that the rate of inflation from last year to this year is coming down, that it will be closer to like 3.7%, 3.8%, which would be a welcome number. No, I'm not going to kid you, but remember that the Fed wants to keep inflation at 2% year over year. So a number that is in the mid threes is pretty far from where they want it to be. And the question is, what can they continue to do in order to bring that number into control? Of course, raising rates is always an option, and the Fed is going to be meeting once again in November, in the early part of next month, to talk about what they want to do and if they want to do that and how that would look. I don't know that they're ready to raise rates right now, with the world economic situation being one thing, but then also, of course, with what's going on in foreign policy, what's going on in the Middle East, what's going on around the world. I don't know if the Fed is at a position right now to be raising interest rates and to squeeze the economy further. That's really what they want to do. And truly what they want to do is see employment come down. They want people to lose their jobs. They've said this. I've shared what they've said. They believe that when people lose their jobs, they accept less money when someone does hire them. They expect less money on the next go around with their next employer. And as a result of that, having less money, of course, means that there's less money to spend. And so that's really what the Fed is telling us, that we have a spending problem, whereas the government, they just borrow money, print money, do whatever they want to do, and they spend it without any sort of reservation, and certainly without any sort of limitation, it seems like. So we shall see how all of this plays out. But for what it's worth, right now, the real estate market, at least in the Pacific Northwest, continues to churn and continues to sell houses. Now, where houses are really being sold, it's a very interesting proposition right now, and I'm not 100% sure that I've got my arms all the way around it. Very few existing homes are being sold right now. An existing home is the one that I live in, for example, or the one that you might live in. It's one that is on the ground already. It's one that is not brand new. It's one that has been lived in. It's a used home, so to speak. And very few people, existing home sales are way down nationwide and in the Pacific Northwest as well. And the reason is because people like myself, we've got really low interest rates on our mortgages right now, and we're not in any hurry to sell our home and to make a change. The only thing that would prompt me to sell my home right now would be either I'm leaving the state, I'm leaving the country, or I've got some sort of financial hurdle that makes it impossible for me to pay my bills, which requires me to sell my home and to take all the cash that I've got in that equity and to use that either to reset my life, to live off of, to relocate to another place, or in general, just to bring my expenses way down. So people that have existing homes are not all that keen on selling them. And keep in mind that in the US nationwide, existing home sales total about 85% of all sold single-family homes. So new construction on average nationwide is somewhere around 15%. In places like Seattle and the Pacific Northwest, where it's really hard to get big pieces of land, big pieces of ground to build 400 unit, 500 home neighborhoods, that new home construction is probably less than 15%. That's a nationwide average. I would say in Seattle, in the Pacific Northwest, it's probably closer to 10%, maybe even less, might be in the single digits, might be like 8%. But that's where we're seeing a lot of movement right now. That's where we're seeing a lot of opportunities for home buyers. They're going into these new construction neighborhoods because the home builders, they still build, right? I mean, this is kind of what they do. They're not going to just stop selling and stop building homes. So in newer neighborhoods and in new construction, we're seeing an uptick in sales, and that's great for the production builders, the builders that build new homes and sell new homes. But what's interesting is that I'm also reading information that visits to these new homes are way down as well. So it's kind of like, which one is it? I mean, are the sales really up and they're moving a bunch of inventory, or are visits by potential buyers really low? Or is it a combination of both, meaning that there are fewer and fewer people coming to these new homes and seeing what is available on the market, but of the fewer people that are coming, people are still buying these homes? I think that might be accurate-ish of sorts. And the reason is because, well, we still have a lot of demand. We still have people, I get calls daily from home buyers who are looking for new construction. I'm sorry, they're looking at anything, but they're looking for new homes. They need to buy a new home. Their family is growing. They are looking at adding square footage, or they are looking at getting out of the lease that they're in. And so on a daily basis, I do take calls from people that are looking to buy homes. And the new construction might be an area where they're finding more opportunities with inventory because that's what builders do. As opposed to people who own a home like myself, I'm not all that keen on selling that house right now. If I were to leave my home and move to someplace else, I would probably turn it into a rental, to be perfectly honest with you. And I'm not all that inclined as I would be to just sell that home and take the cash. I mean, maybe if I get a really, 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 really high offer, that would be great. But until such time, I would probably just turn it into a rental, get the income from that rental, and use that income to pay for a mortgage or a rental unit somewhere in a more affordable state or a more affordable place. That there seems to be a lot of that happening right now. So there's just a lot of movement in the market, what I would call churning in the market, but it's not going in a clear direction in one way or the other. So it's really hard to predict what comes next, where we're headed, what's going on. And we're going into the holiday season, which typically things slow down. People just decide, hey, I am where I am for the next couple of months. We got Halloween coming up. It's one of my favorite holidays. That's going to happen next week. I will be hopefully in costume for that. And then, of course, Thanksgiving, which is one of my absolute favorite holidays. And then we're going into the Christmas season and the New Year's Eve season. And people in general are probably saying, we're going to hit pause. We're going to see what comes next. We're going to see what happens with the retail sales for the consumer coming into the Christmas season. I don't know where we are with that, guys. I see a lot of things. I go to the mall on occasion and I see in Bellevue, which is a very affluent part of Western Washington in the Puget Sound area, I see a very full shopping mall. I see people buying stuff. I went with my wife a week ago to the mall and I was amazed at how much consumption was going on. And then I read stuff about, the American consumer is tapped out, they're running on fumes, they've spent all of the built up savings that they had through COVID and through the stimulus packages and whatnot, and now they're financing their lifestyle on credit card debt. I have read that credit card balances are going higher and higher and higher, and interest rates on credit cards continue to go up. So I don't know what to believe, guys. I mean, honestly, I'm scratching my head just like everybody else is, trying to figure out where this economy is. The numbers suggest that we've got this pretty strong growth, like 4.9% gross domestic product is a pretty big number. I'm not going to kid you. It doesn't feel like that. I'm curious what went into that number, because a lot of people I know are scaling back on things, maybe not taking big vacations any longer, maybe not buying new cars right now, maybe not traveling as much, even domestically or locally, maybe not spending as much on electronics and the latest and greatest gadget and gizmo. It's just a weird sort of mixed bag. I don't know. I honestly don't know. And I'm waiting for more data to see what happens. Personally, I just look at the cost at the fuel pump and I look at the cost in the grocery store. I know that that's something that the Federal Reserve does not like to count in their core numbers. They exclude fuel and food from their core metric for inflation because in the Fed's mind, they can't impact what people spend on food or fuel, and they can't impact the fact that I will still buy food and fuel no matter what it costs, because that's the lifeblood of an individual and of our economy. And so they exclude that when they measure inflation at the Fed, because their policies don't touch food and fuel. Whatever it is, you're still going to fill up your car and you're still going to fill up your refrigerator. You may not buy anything else if you have nothing left to spend, but you're definitely going to buy food and fuel. So I look at those costs and I look at those situations and I think to myself, people are running out of money. I don't know if that's accurate or not. I would love for you guys to tell me. I mean, please, let's engage. Like I do these things. I've been doing this since April of 2020, believe it or not. That is more than 3.5 years now. We're coming up to 3.5 years. And I would love to get back to a place where we engage on these subjects. I would love to get back where people come onto my Facebook page or onto my YouTube channel and actually make comments. But please, if you're not comfortable doing that on Facebook or on YouTube, please reach me personally. You know where to find me, right? I'm not hiding. Please reach me personally and tell me what you're experiencing, what your personal experiences are, what experiences you have with your family members, with your friends, if you've got adult children, what their experiences are, whether you live in the Northwest or you live in the great state of Texas or some other place that's also probably a great state. Whatever it is, I'd like to know. I mean, I'm very, very curious how people are managing right now, what people are spending money on, what people are not spending money on, and where things are in the general sort of mindset of the American consumer. Because I don't know if the numbers that we're being told are accurate. I don't know how they're reaching these conclusions at the Bureau of Labor Statistics and the other government offices that are making these numbers or that are collecting this data and providing these numbers. So I'm curious, and I think a lot of other people are curious as well. Are we in a strong economy? Are we in a strong gross domestic product, or are we in a weaker economy? Are people really that well employed, or do a lot of people, you know, have multiple jobs? Are there people that are taking on second jobs in order to make ends meet? Are there people that are leaving commission only positions like mortgage lending or real estate sales and taking jobs that will pay a salary or an hourly rate because it's just really hard with volumes where they are? This is one of the toughest real estate markets, frankly, that I've ever been in. And I've been doing this for more than 2 decades. And so the numbers and the comparisons and, you know, where things are, it's a pretty tight market right now. So let me give you an idea of what that means exactly. Every year, Fannie Mae and Freddie Mac have a projection of like how many trillions of dollars worth of mortgages are going to be originated in that year or will have been originated in that year. There were a couple of years, 2020 and 2021, where we saw $4 trillion worth of mortgages being originated. That means purchase mortgages and refinance mortgages. $4 trillion. That was in 2020 and 2021. Nationwide, of course, nationwide. There were no numbers for the years before 2020 and 2021. There was not a number that started with 3. So there was never like a $3 trillion year. We went from somewhere around like 2.5, 2.8 trillion, 2.7 trillion in the early, like in 2019, 2018, something like that, all the way to 4 trillion in 2020 and 2021. Those were really big years. The prediction for this year and next year is 1.6, 1.7 trillion, not even 2 trillion. So a very significant contraction in mortgage lending nationwide. Now, there's still people that are doing great business. There's still people that are buying homes. There's still people that are taking out mortgages and things like that. But the environment in which we're operating is really constrained, is really coming down. And I'm just curious how other sectors of our economy are doing. And I'd like to challenge you guys, whoever it is that's watching out there, please share with me what you can. Share with me your personal experience. Share with me your friends or your families or your colleagues' personal experiences. You don't have to name names. You don't have to give me numbers. I'm just curious anecdotally, where are we with this economy? Because I don't know that the numbers we're getting from the powers that be, I don't know if they're accurate. I don't know where those numbers are coming from and how those numbers are being projected. So with that in mind, I do apologize. It's not been the full 30 minutes. It's only been about 20 minutes today, but I've got a lot going on. As many of you know, I do have family in Israel. I do have a lot of people in harm's way right now. And it's been a very trying 3 weeks since October 7th and since all the events that have happened in Israel and in other parts of the world, including in parts of the United States and parts of Europe as well. and I'm spending quite a bit of time on the phone with family, with friends, with people who need support, with people who are trying to get information, and with people in general. So I know that that sounds a little bit odd if you're not personally involved with something like this, if you're not personally touched by something like this, you might not, it might not register the same way. But for everybody that does have a personal connection to that part of the world, everyone's been impacted, and everyone continues to be impacted, and no one is quite right with this and with what's going on. And it takes a toll, guys. It does take a toll. Now, I continue to be optimistic. I continue to pray. I continue to send positive energy and positive thoughts to all the people in harm's way, to my family who still lives there, to my relatives that are in the Israeli Defense Forces and who are fighting this fight, and to the people here in the United States who are also supporting my native land. Although I'm a U.S. citizen, I'm still also an Israeli, and it's just a very it's a very difficult time. So your prayers and your support and your blessings are very much appreciated. A lot of people have reached out to me personally, not on Facebook and not, through social media, but I've spoken with a lot of people and continue to get a lot of encouragement from friends and relatives and colleagues and clients. And if you would like to discuss with me or get my opinion on what's going on overseas, I'm more than happy to have those conversations with you in a different format. This is not the place for that, but I do want to thank everybody who has reached out, and just let you know that it means a lot, not just to me, but to my family in Israel and to family and friends throughout the United States and throughout the world. So with that said, I want to wish everybody a wonderful day, a fantastic weekend. I won't see you next week until after Halloween. So if you are trick-or-treating, I hope you have a great time. I hope you get a lot of candy. I hope you dress up and enjoy that. And whatever else you're doing, please stay safe, stay healthy, stay sane. And I will see you next time. Please do reach me, though, and let me know your stories about this economy, and let me know if you do want to talk about what's going on in the Middle East. Thank you once again, and we'll see you next week. Y'all take care.